in your piece this weekend, you said there's a lot of insider selling going on, at least as far as today's markets are concerned. Nobody cares.
No, nobody cares. And by the way, also have to stress that this is not exactly one of those gotcha indicators that says the market goes down as soon as you get one of these things. It's more about the backdrop. Look, I'd be surprised if the market went up 25% in 6 months and insiders didn't cash the register. They get stock for free. It's free money.
Well, they don't. It's part of their compensation. I don't know. You use this term free.
They didn't pay
People work for it.
They didn't pay for it.
They work for it.
However, I do think that, look, the market's doing the most bullish thing it can do, which is all these excuses keep coming around for why it should kind of stop the upward march. It hasn't done it yet. Last week, it was a little bit more of a defensive turn in terms of who was outperforming. You know, it was healthcare and staples and things like that and utilities. Look, we'll see. I don't think it has to be some kind of a big drop. I'm pointing out the exact ingredients that were here last April and April 2010 are here now.
Maybe it does, maybe it doesn't. Can we go to the charts? So that's the Dow today. Boy, I'm even a little surprised it was up so strongly today.
No, first day of the quarter, points. I mean, you'd be very hard-pressed to bet against it. The most bullish thing was it wasn't down on Monday. I saw an analysis that said the last Friday in March is like one of the worst days in the world to buy the market, and it actually did fine.
Right, okay. Here we go. Let's go to, do you have any other charts for us? Oh, there's the S&P 3-month. Boy, that thing's like a mathematician drew that line. It's kind of shocking. Nasdaq's been up so big. What do you think about this Groupon scandal? Not scandal, the accounting irregularity. Do you think people? What the amazing thing is that the high beta, something that Jack will be on a little later, and I talk about the dash for trash. People love these high beta stocks, and yet every now and then the Groupon hiccup kind of shows you why they are high beta.
It's a little more than a high beta in this case. I think it's the fact that so many individuals have kind of touched this service. It had a real narrative attached to it, how this is the wave of the future. But what I will give the public and even the financial press and the kind of investment world credit for is, even before it came public, people said, this is not a great business model. They're spending a lot. It's people on the ground. It's not a very virtual business at all. It's people going to pizza shops and saying, let's do a deal. It's not a matter of some new mousetrap, and it was replicable, and Amazon's doing it, everyone's doing it. So I don't know anything really about what's behind the accounting issues, but there was a lot of questions even before it became public that this was a problem. And also, it also went public in that manner of the hype name that goes public.
They
sell a
squeeze
sliver.
the liquidity down. I mean, I forget what the float is. I think it's definitely under 7% or something like that.
It's kind of silly.
It's a very, very small.
It's just to mark employee stock. To market, essentially.
But we are seeing a few of these excesses. You know, the Zynga folks over at Zynga announced the big secondary offer. I think they did the big secondary offering. And it always, moments like that always gives you time for pause. What are you going to be looking at over the next couple of weeks in terms of gauging the market? Earnings kick off, I think, in a couple of weeks also.
They do. Earnings are going to kick off soon. And, I feel like the idea that earnings are flattening out is just so pervasive right now. It'd be really hard.
They'll have to be even below expectations for the market to get really shaken
below
up.
and also I feel like it's got to be in these bellwether names that all of a sudden it's like, wow, even these guys couldn't make it work. So I don't know that earnings is going to be that knife in the heart necessarily. I honestly think that if I'm looking for bolts from the blue potentially, it's going to be that the Fed doesn't give you more candy, and they say, okay, you've had enough of a sugar high, and if the economic data is good enough, it's going to be about, are we even thinking about less easy money? I'm not talking about interest rates going higher, but I'm talking about the idea that we can't count on a QE3 or something like that.
Now, earnings do, as I said, kick off in a couple of weeks. Is there any of the do the jobs numbers this Friday matter?
I think they matter a lot because they filter into people's view on Fed policy. I feel like the trend at this point is okay enough that 1 month is not going to throw it off the rails. But I do think that if we get a real strong number, and by the way, I think there's a lot of people doing this number crunching that say warm weather plus seasonal adjustment has basically goosed economic data in general. So it matters, but I don't think it's the big swing factor.
Final question for you. You talk to these Wall Street strategists. You talk to the folks on Wall Street here. As we've talked about a number of times, there are a few of the Wall Street strategists out there that are still hanging on to their bearish views. Do you smell capitulation? Are they going to throw in the towel sometime in the next couple of weeks, or do you think they're going to go down with the ship? And I bring that up in the context of your colleague,
Yeah.
Mr. Abelson. I kind of smelled in his writing this past week a little bit of, well, maybe things aren't really as bad as everybody thinks.
I don't know if it's really right here. I think because we saw the last 2 Aprils play out the way they did, where you had another levitation into late April, and then you were smart if you were bearish, maybe there's not an impetus to do it just so soon. It might happen. I feel like, though, the people who have been outright bearish are staying that way. They're just talking less about their index targets. They're talking more about what's going on below the surface.
Right. I read the most convoluted discussion of Goldman Sachs trying to square their, the views of their European strategists.
Cluster New York guys, yeah.
Costa versus David Costa, who's negative, and they were kind of square. And I'm reading that going, that's what happens on Wall Street. You always got to jump through hoops.
I don't understand why they feel like they jump through hoops. You could have Charles Barkley and Digger Phelps talking about the same game from the same team at ESPN, arguing with each other. I don't see why that's a problem on Wall Street. Why can't you have differences of opinion in the same shop?
Well, you can. But try
have to paper them over.
Yeah, you got to try telling that to the clients who listen to the wrong guy. Mike Santoli of Barron's, thank you very much.